I inspire myself with what I wear every day. So for this, I had a little Epic swag that I had on, and my USA hat comes from Jim Craig, USA Olympic hockey goalie. This is the 40-year anniversary of them beating the Russians, and I was feeling inspired on David beating Goliath, because I know at a stage we were David, and I still feel like that some days.
It's time! Work, play, evolve!
I want to connect the listeners to the best of the best. Welcome to the Evolved Broker Podcast. I'm your host, Pat Costello, the co-founder and principal at Evolve MGA. Our mission for the podcast is to bring the insurance industry the best of the best. My guest today is John Hahn, the co-founder and CEO of Epic Brokers. Epic is the 15th largest retail insurance broker in the United States. They have nearly $900 million in revenue and more than 3,000 associates across the country. John is from New York and played baseball in college as a pitcher throwing in the low 90s. He has an incredibly inspiring entrepreneurial spirit, and I really enjoyed speaking with him. Before founding Epic, John helped start and sold Tri-City Brokerage, which, if you aren't familiar, is one of the nation's largest and most successful wholesale agencies. Anyone that's interested in entrepreneurship, overcoming adversity, the benefits of the insurance industry, running an enormous company, and the future of Epic will really love this conversation. John and I discussed his college baseball career, which included overcoming a huge injury, his introduction to the insurance industry, how he helped found and name Epic Brokers, how he hired 52 people in 4 days, why people need to consider joining Epic, how failure was by far his biggest teacher, and how the clothes that you wear can supercharge your day. Without further ado, here's John. Mr. John Hahn, how are you, man? What's going on?
Well, good. How about you, Pat?
I'm doing great. I am so excited to have you, and I want to be respectful of your time. There's a few things I really want to accomplish in this podcast. I want people to know who you are, and I want people to understand your journey through the insurance industry, because objectively, you are one of the most successful people in the industry. And frankly, I think that, your career's taken lots of different turns, and you've been on different sides of the distribution chain, from wholesale to retail. And so what I'm hoping we can do today is, number one, tell your story, get the audience to better know you on a personal level. I want to hear what got you into insurance and what caused you to found Tri-City Brokerage. I want to discuss how you transition from wholesale to retail. And then along the way, would love to pause on major milestones, learning moments, and habits that have helped you achieve success. And then finally, at the end, would love to discuss Epic Now, advice for a new employee at Epic, Galway Holdings, and your vision for the future of your business in the industry. So if that sounds okay to you, John, I would love to jump into your background, your childhood, how you grew up, because I know you're from the East Coast, but now you're out on the West Coast, so I'll let you dive in.
Yeah, thanks. Thanks, Pat. I appreciate it. Thanks for having me on, and appreciate the opportunity to tell people about kind of who we are and our company, and how we got to this stage. So yeah, I grew up on the East Coast. I was born in Brooklyn and moved to Long Island at a pretty early age, and considered myself a diehard New Yorker. Ended up going to college, played college baseball. Probably spent more time doing that than I did at school, but I learned a lot from that experience. And look, from my perspective, I grew up in a pretty middle class family environment. Had great parents. I can't blame them for anything that's gone wrong in my life. They gave us a really great foundation, and I've got 3 siblings, and we were like everybody else. I was the oldest, so I found my way to bully my way to whatever I thought I wanted, and had a really normal childhood. So I don't have any dysfunctional stuff to look back at and to pay a psychiatrist money for to sit in a chair. So I've every mistake I've made, I own them, and they're all mine. So yeah, I think look, my path into insurance was. Like most people, was not it was not something I planned for, even though my dad was in the insurance business. He was on the risk management side. And while I was playing baseball at New York Tech, my junior year, he got me a summer job there. And I very quickly saw and learned that it was a really terrific industry. I enjoyed the people I met. I worked for a large brokerage firm.
Right.
I was doing the worst job of all time. I was chasing aged receivables, and as you know, since you're in the industry, that is the crappiest job you can ever have.
Yes, there's no doubt. And John, real quick, I would love to just pause on the baseball career, because I don't think people realize how much of an athlete you were and are. I heard rumors that you were a pitcher and that you could throw 95. Is there any truth to those rumors, or is there any more background you can give us on that?
So yeah, I pitched in college, and there were no guns back then, so I'm older than I'd like to admit. But yeah, I was probably in the low 90s, and I played for a great team. I went to New York Tech, and the handful of our guys on our team were all slotted to go to NYU, and including myself as a freshman. And early in August, Title IX kicked in, and they eliminated all Division I sports. So most of us did not have a scholarship remaining. And I give the coaches at NYU a lot of credit. They found a school that, even though I lived on Long Island, to be honest, I never heard of New York Tech. And they were trying to build a great program. They had a coach who was was a big force. He played at the major league level with Pete Rose and was his roommate. So we had a great team. I had a fantastic experience there. Learned a lot. And look, I think it was one of my first lessons in business came from, being on a team, having a coach who was tough. He had high aspirations. His goal was for us to get to the College World Series and for us to turn our program from Division II to Division I, which all of those things almost happened. We lost in our regional final game my senior year to get to the series, but we lost to a future Cy Young Award winner, Steve Bedrosian. So not too bad, but yeah. I hurt my arm in my sophomore year, and frankly, that kind of adversity for a young kid. You read about athletes today who lose whatever they think their dream is. And I got to focus on sort of what life was going to be. And the first thing I had to do is figure out how I would be successful by losing a foot off my fastball. And I actually became a better and smarter pitcher. I was not throwing anywhere near where I could overpower and dominate hitters, but I became pretty crafty and learned 4 or 5 pitches and got my way through a 4-year career with 1 career loss. So wow. I went from being a power pitcher to a junk pitcher, and but I did realize that the guys we came against and played, it would have been a steep climb to play at a high level. And guy who pitched ahead of me on our team, Don Cooper, he ended up actually getting to the major leagues, had 5 years in the bigs, and he has had an incredible career with the Chicago White Sox. He's the pitching coach there, won a World Series with them, and so it's fun to see the direction that guys went into. But I use that experience as one that I correlate to business, which is how do you build teams where it's not about the name on the back of the jersey, it's about the name on the front. And we had a lot of accomplishments and a lot of achievements. And the year after I left, we went Division I, and School became a great powerhouse, and I launched into this crazy business of insurance.
So let's talk about that transition, because I'm sure you took a lot of that competitiveness from college sports directly into the business world. Can you talk, and you mentioned also that your dad was a risk manager. Can you talk about your first job coming out of college in the insurance industry, why you took it, and what that job consisted of, and any major learning moments from, that first entry into the insurance world?
Yeah, my original goal at school was if baseball did not work out, which seemed early on, I was pretty realistic that it wasn't going to. I was studying pre-law. I was going to go that direction. And after the summer job, I literally came back, and my college roommate was also my best friend and teammate. And I said to him, look, we got to switch from pre-law to finance. I think this is a great industry. It's not as boring as it sounds. Insurance has got a terrible reputation. Everybody hates the name, but I said it's much different than that. And luckily, the firm that we worked for was a large brokerage firm, which you're way too young to know the name of, but it was Fred S. James that through multiple acquisitions and mergers were ultimately a part of the Marsh brand today. And they hired myself and my roommate and actually devised a training program for young employees, people who they had high regard for their background and their pedigree. And to be frank, they loved hiring athletes. They thought that they were competitive. I knew my dad had introduced, I'd known some of the key people there from my dad, and they knew that, I was all about winning. And, when you come into any business with an approach that it's about winning and team, you can pretty much get the most out of any talent. And so I was lucky. I fell into a training program so I could learn the different product segments and product areas.
And John, just to jump in really quick, I just want to make a correlation between Philadelphia insurance, because Jim McGuire was really famous for also hiring athletes. And so that's kind of been a common theme that I've seen. But just to clarify, so that first job that you took, that was on the retail side of things, or was that was on the wholesale side of things?
No, so that was on the retail side. So
got it.
Yeah. So I was, essentially I was being positioned in certain product areas, and most of them were marketing oriented. And so I learned property first, and then I migrated into casualty lines. And to be frank, I loved it. It was, I thought it was creative and interesting. Really just took a shine to thinking I could be a top-notch casualty marketing guy. And over my course of time there, my mentor was a guy named Kieran Burke, and he was my boss. And toward the end of kind of my fourth year there, Kieran was assigned to building a internal wholesaler for Fred S. James, and he recruited me into that. Seemed really exciting. I was geared to do that in New York. And one day he called me in on a February, it was freezing cold. And he said, what do you think about moving to California? I said, I don't know. I don't know if my accent would fly there. I don't like any California sports teams, but what's the job? He explained it to me. And look, I was 26 years old. I had just wrapped up my MBA. I did that at night. And I saw that there was no real downside. I saw that I was going to get an opportunity to start a business, build a business. I didn't know anything about what I was walking myself into. I didn't know anything about the San Francisco market. And I just said, worst thing that can happen is I screw this up and I fail, and I'll go back to New York where people understand me.
Right. Well, I'm very excited to hear that the love for the California teams has since changed, which will let the audience in on a little later on. But in terms of your first mentor, Kieran, was there like a mentorship program, or did you just meet him organically? Did you seek him out? How did you guys get connected?
So I was fortunate enough to have actually two other mentors in that company. And one was the president of the company, a guy named Tim Mahoney. And Tim went on to become president of Marsh, North America. He was a great guy, and he really gave me insight on the industry and the business and career pathing and whatnot. And Kieran worked for Tim, and so we were really connected by Tim, but I found out quickly that we were very different and unique people, but together we were pretty powerful, and it really it led to the ultimate story, which I'll talk about a little later on, as to how we started Tri-City, because Kieran and I were two of the 5 founding partners. So yes, I didn't really know Kieran. I was introduced to him, and we sort of figured out that for us, 1 + 1 was equal to 3 or more, and we just started doing some great things and having fun together.
That sounds good. Did you put any structure into your mentorship relationships, like where, I'm going to meet with Kieran once a month, or, I'm going to meet with Tim once a month, or anything like that? Or was it more just kind of organic? You guys were kind of drawn to common things. You guys just had a strong connection.
Well, the industry was different back then. So organized mentorship wasn't really the case. So mine really related to 5:30 at the local insurance bar, and he introduced me to everybody in the industry, and I learned everything about insurance from probably 6 o'clock until 8 o'clock at night. Thankfully, I was not a hard liquor drinker. I was a beer drinker, but I watched a lot of other guys. They could do amazing things and be really smart with a lot of vodka, and I did not go down that path. So he introduced me to the excess and surplus lines universe. I didn't know much about it. He was definitely a well-known person, and he was a needle mover. I got a chance to work on some, really large, complex clients and accounts. I got to meet every underwriter on the planet. He took me everywhere with him. So whether it was London or Chicago, all the hubs where casualty E&S underwriters lived, and I just really liked the game. I thought it was really action-packed and fast, and I had a chance to be creative and had fun doing it.
I agree with all those things, and that's along the same lines as to what I've experienced when my brother and I delved into the evolved world and cyber insurance and creating a business. So I'm on the exact same page. So to continue with your story, so you moved out to the Bay Area, and at that point you were still with your original company. And what was can you explain the transition between going from that retail world, and then you opened up the wholesale branch of that office in San Francisco, and then it sounds like that company may have been sold, and that's what caused you to start Tri-Cities?
Yeah, so I moved here to start a wholesale branch for Fred S. James. And so in doing so, I was fortunate that I had a parent company that was looking to take business that had been put with third-party wholesalers and intermediaries and begin to capture that business in-house, so to speak. And so I was charged with doing that. I'd never built a business. I had no idea what the hell I was doing. And from finding office space to learning how to lease a photocopier. And back then there were no computers, so I had what the heck was a telex machine and all of that. And so figured that out. And the market was very soft when I moved out. I worked my butt off. I worked 7 days a week to try and get brokers to give me accounts. And you've started a business, Pat. You know how hard that is to get traction. To really get traction. It's hard. And look, I spoke a different language, and I worked a different time clock than my competitors. I woke up and got after it every day at 6 while everyone else was in at 9, and I didn't shut it down until 8 or 9 o'clock at night. And I just started showing that I could outwork the competition. And look, I got lucky kind of late 1984. The casualty market started to change and started to harden. and I had gotten a good reputation with underwriters, and my style of doing business was different than others. It was not a, here's an attached submission, please quote. I did a write-up, and even if they didn't write the account or quote it, they could look in 2 pages and decide whether they want to spend any time on it. And
right.
So it kind of caught fire a little bit, and then Fred S. James got sold shortly thereafter. Kieran, called me and said, look, I think the market is right. I think we should maybe think about starting our own company.
Mm-hmm.
We should do it with a couple of other guys. We had opened an office in Chicago and New York. I was like 29, and I said, okay, sounds good, but I don't have any money. So, where are we going to get the money from? I've not done this before, so it sounds like a really good idea. So if you've got somebody willing to invest in this, let's talk about it. No, I don't. And we ended up having 5 of us meet in Chicago a week later and spent the day kind of going through what a business might look like. And we identified people we thought would be interested in investing. And nobody on the A or the B list really showed up, but we had somebody on the C list who thought it was a really cool idea. And frankly, after a weekend meeting, he gave us $1 million. And
wow.
3 weeks later, we started Tri-City, November 1985. So
was he like a stereotypical venture capitalist that we would, find in Silicon Valley today? Or how did you find him as an investor?
So one of the underwriters I developed a good relationship with was underwriting on behalf of, at that time, the Illinois Insurance Exchange.
Okay.
Which was kind of I don't know if you heard of it, but it was sort of like a mini Lloyd's approach to underwriting E&S exposures. And
okay.
And his owner was a guy named Jeff Beresford Wood, who owned sort of a holding company that was in and around all aspects of insurance, reinsurance broking, underwriting, MGA. And he was looking to get into the wholesale space. And he loved the concept, and he was definitely a gambler, and
cool.
And it didn't take him long to commit the money. And he made a really smart decision. We only used about a third of the $1 million that he gave us. We used about 300,000, and we turned cash flow positive in 4 months and never turned back. So he was clipping coupons.
So when you pitched your business plan to him, was there anything about your wholesale brokerage that you saw as a major differentiator, or something that you saw as like, we're going to change the game and we're going to be extremely successful for the following reasons that are different from a prototypical wholesaler? Was there anything like that came to mind when you guys were presenting that business plan?
Yeah, there was. There was a very specific, what we called, word value proposition didn't really exist back then, but we proposed it as such, and it was, underwriters were absolutely just swamped in submissions in 1985. The market was harder than it had ever been. There was truly no casualty capacity, and we were our notion was to open up 3 offices. So we'd be in 3 different time zones.
Okay.
We would be accessible to our clients all hours of the day. We promoted ourselves as being what we were, which was a young, late 20s SWAT team. And on every piece of business that came in, every single person in our company was involved. So we had a total seamless, borderless approach to the business. And if we had a contractor in at that time, it took 3 or 4 carriers to get $5 million in limits done. We would, on the West Coast, we do a portion. Our guys in Chicago would do a piece. They do $1 million or $2 million. And our guys in New York would do $1 million or $2 million. And carriers loved it. We did all the pre-underwriting for them. They could look at any submission of ours, and they could know in less than 5 minutes whether they wanted to pass or play.
Wow.
As opposed to looking through a pile of information like this and trying to understand it. We were just a SWAT factory, and we just ran hard, and then we played hard. We had a lot of fun. It was
work hard, play hard. Yeah, I love that.
Man. Yeah, it's still the same. It's still the same. This should be an industry, and look, you tell me. We've gotten to know each other a little bit over the last couple of weeks. Your family's in the business, and it's an industry you can do both, right? You can have a great family life, and you can have fun, and you can celebrate winning, and you get to work hard, and bear the fruits of your own labor.
I fully agree with you, John. I think everything that we've discussed has really been based around the idea that the insurance industry is a gem of an industry that a lot of people don't fully understand or comprehend because they have associations in their mind with their car insurance or, with, maybe some sort of accident or something like that. But the fact that the insurance business is the relationship business, and the fact that there's so much bonding that happens when you're closing deals and when you're meeting people, when you're establishing connections that, allow business owners at the end of the day to get the coverage that they actually need, and individuals as well. It's a beautiful thing. And so I've really enjoyed it thus far. And also there's a lot of areas where I can relate to your story of, coming into a business with, late 20s, SWAT team, commitment to service, commitment to hard work, coming up with creative solutions to provide your clients at the end of the day the best possible experience they can. That's everything that we're striving to do as well. So I connected with a lot of the things that you just mentioned. And so it sounds like that was, it was a super fun time to grow Tri-Cities.
Awesome.
And so that was, correct me if I'm wrong, but that was 85 to 2003.
So our run really was 2005, 1985, and then we had various times within our Tri-City years where we brought in some capital providers, and we saw an opportunity to grow our business a little differently. Private equity wasn't in the business back then, but there were some unique carriers that were looking to invest in distribution as things were changing. And look, for us, we ran 10 years from 85 to 95 of, really running it up, and built a great business, and had grown to be the number 3 national wholesaler. And then things changed. The world changed, and a lot of the retailers at that point in time started creating or buying or forming their own wholesalers, and started moving business into that. And we had to switch our business model completely from getting from our market share being with national brokers to being able to service independent brokers. And it took work. It was, to be frank, I learned something about the business from 85 to 95 about, team and alignment and partnership. But I really didn't learn about running a business until things started failing and started falling apart, and we had to change our approach and change our model. So that is when I really learned what business is all about, because you don't learn that much from success, but you learn a lot from adversity and from failure. And we had a lot to change. So.
Well, John, it sounds like there's a direct correlation between your experience with baseball and when you hurt your arm, and when you had to master those alternative pitches and deal with adversity to become crafty, to your experience with the wholesale model with Tri-Cities. And I also want people to be aware of like the scale that you took this thing to, which, the stats that I have are, you guys had 4 offices, 200 employees, and $600 million in gross written premium. So I don't know if those are the same numbers that you have off the top of your head, but enormous scale.
Those are the stats, yeah. And we did it all organically. Back then there were no acquisitions. It was, one employee, one person at a time. We cherry-picked people who had that winning attitude and that desire to do something great. And it's not hard. Like I said, you're building a business. Finding great talent is really challenging, really difficult, and then molding them.
Yeah. Yep. I totally agree with you there. So when 2003 came around, what were the biggest factors that caused you to sell the business that you built over the span of years?
Yeah, that's a great question. So, from 98 to kind of 2002, we had some of my partners ended up going in different directions. There were different agendas, personal interests were different. I had to totally reposition the company. I had to find a way to provide real equity opportunities to people who were getting it done with the new direction of us being relevant for independent brokers versus the large, complex national accounts. And look, a lot of my friends ended up, they're still in the wholesale business today, whether it's at Amwins or RT or CRC. Yep. I mean, I've got disciples all over the universe. But we had a different lane, and we found out that we had to figure out how to be a player in the program arena. We had to handle smaller accounts more effectively and more efficiently. We had to really get into aggregation opportunities. Technology was just starting to sort of have a play in this with the .com era, and people looked at insurance as being an area that would be easy to sort of just, reinvent. I think the ideas that they could change distribution dramatically, I think were flawed, but you could be more efficient and more effective. And we didn't have the capital base to do it. So coming out of, end of 2001, the trade center went down. The market changed again radically. So our company from October 01 to October 02, the company doubled in size without us adding one person.
Wow.
And we were looking out and saying, at that point in time, there had become a real market for owners of wholesalers to monetize their investments, which was part of it. But really part of it was, how did we have a capital base where we could be in the M&A game? I didn't have any experience in that. And so we went and we ran it was a tight process. It wasn't one that we really drove ourselves. We had a couple of interested parties, including Chubb Insurance Company, who really saw that having a wholesale engine could be really valuable for them. And we went down the lane with them for about 6 months. And then out of the woodwork, company New York Stock Exchange company called Bisis came to me through an advisor. And, be frank, I love what they had to say. They were intermediaries in 5 other verticals, including a life insurance wholesale business.
Okay.
And they were looking for a new opportunity to take a platform and take it to the next level. And, I gave them like 45 days to get a deal done, and they did it in 44. And we sold it for probably 7 or 8 times what we thought we would get for it. And we were in position to really grow and build out the company. So it was a really great deal. They were a terrific owner. I learned a lot, got my M&A chops there, and learned how to use other people's money for the first time, which I had no idea how to do that before. And that's a way better game if you can figure that out. So.
Yeah, that's super interesting. That's something I feel like I could totally learn more about myself. Okay, to continue on with the story. So it sounds like you sell to Bisis. Things are great. You're there for a while, and then you're at a stage where you can really do whatever you want. Right. And so you have Epic in the future, but it sounds like you had like a little bit of an intermediary period where you didn't know what you were going to do. And so I'd love to hear, the transition from Bisis into maybe meeting Dan Francis and going down the journey of Epic Brokers.
Yeah, perfect. So yeah, in 2006, things were going great from my perspective. We had kind of quadrupled the company in the time we were there. We built out the areas we wanted. I had a terrific team. They were a great owner. And unfortunately for them, there were some issues that had occurred within the market. They got caught up in Spitzer investigation. They were one of the first, you'd be interested, they had one of the first real large cyber claims that I had ever seen or witnessed. And to be frank, it set the company back on its heels for about 3 months. And it probably cost them $10 million to solve it and settle it. And, nobody knew what they were doing back then. And ultimately the stock started stalling, and the CEO of the company decided to leave, and he went to Hewitt to become CEO there. And they decided they were going to sell the company, asked me to engage in that process, which I did because I felt it was going to be a real learning experience. And I also wanted to position the company for the right exit to whoever we were going to become a part of. And I wanted to be in the room to have that voice. And it took about 4 to 6 months for that to happen. And during that time, it was a fascinating process. It was late 06, early 07. The world was good. Financial markets were great. But I determined that wherever we were going to land, my time at doing this was pretty much over. I was 50. One of my passions is wine. I had in my head decided I was going to create a fantastic Pinot Noir brand. I created the business plan. I had the money. I had the winemaker. I had the fruit. And so my goal was really to ride this out, have a nice transition, get my people who I loved into the right home, fight for them. I was going to transition the company to become one of my best friends, John Jennings. John was going to lead the business, and it was a great story. And so the company ultimately got sold to J.C. Flowers and was being merged with Crump. And at that same time, my other best friend, Dan Francis, was CEO of ABD. ABD had sold their business to Greater Bay Bank a few years earlier. And Dan found out at the time that our company was being sold, that Greater Bay Bank was being sold to Wells Fargo. And he said, I don't want to work for a global bank. And he and I were sitting there one day and just said, what is the serendipity of this moment where two people who have been with companies for a really long period of time end up becoming free agents and not knowing what they were going to do. So I tried to convince him to come into the winery gig if he would start a deli with me. And he didn't think the deli thing sounded that sexy. So, so he and I spent some time. We looked at the market. We had connected with one of our financial investors at that time, a guy named Jeff Capel. He had some thoughts, and we looked at the California market. I hadn't been in retail in a long time, but all my clients were retail brokers. And, I'd been studying that space for a long time. I had great relationships with owners of businesses, great producers. He knew how to run and operate a retail prac business. We just said we could do something really creative and really unique and really differentiated. And we ended up putting our business plan together of what we thought we could do. And come April of 07, we decided we were going to do this. The only missing piece was money. And we decided we needed $100 million. I don't know how we came up with that number, but it seemed like a lot of money at the time, but it seemed like one that we could spend.
Okay. Nice. That's wild. That's very cool that you guys were free agents at the same time. And,
yeah,
it's so funny. Our videographer, Chris, who's here, is of the Michael Sourdough family. So anyone who's in the Bay Area, you might have an idea what that is. Some of the best sandwiches around. So it's funny. We were just talking about
my sons are going to be excited to hear about that, by the way. Marin Catholic boy, and that was lunch 3 days a week, I think.
Oh man, yeah, there's no doubt about that. So you get the financial backing that you need in order to go into retail business, and if someone gives you $100 million, I'm guessing you had a business plan laid out of, okay, we're going to put this money here, we're going to put this money there. Was there anything that comes to mind as like, okay, this is the primary place that we need to put capital to ensure business is going to be successful?
Yeah. So, we thought it would take us 4 or 5 months to get the money. We thought it would be maybe 3 or 4 investors. I had brought in some private equity money, some investment money when I was at Tri-City, and they did really well in the BISIS trade.
Uh-huh.
So I had a little bit of street cred, and my intention was to really take the summer of 2007 off. My son was a senior in high school. We were going to go to some baseball stadiums I hadn't been to, and take our time raising money. And we were thinking about launching it in kind of September of 2007 when, we took our first stop to Greenwich, Connecticut in May. We saw Stone Point Capital, who were probably the leading industry private equity investor. Mm-hmm. Chuck Davis is a legendary guy. And so we stopped there, made our pitch. In 2 days, they said, we'll commit the whole $100 million. Where are we going to deploy it? Question you just asked. Mm-hmm. And we had a platform sort of ready-made. Platform was called Calco. Calco was an 80, well, at that time, 70-something-year-old brand. They were the brokerage arm of Cal Casualty, the insurance company.
Okay.
Again, serendipity, but Dan and my wife had both worked for 7 or 8 years for Calco in the 80s, so they knew that business really well. We knew the people, and they had a downfall. So I think most buyers would not have seen them as being a great buy because they had their revenue base had dwindled quite a bit, but we saw the inherent value in it. And for us, it was actually a good time. They were in Orange County, Sacramento, and San Mateo. Mm-hmm. So our goal was, our business model was a regional business. It was California dominant. We saw an opportunity in the middle market to not only acquire firms, mm-hmm. but to hire great producers with books. Mm-hmm. And the goal and the opportunity was really around the equity opportunity we were providing. We were different than everybody else that we gave producers, key people, everybody in the company a chance to either buy equity alongside us and Stone Point, and by us meaning me and Dan and mm-hmm. what we invested, or they could earn equity. And, if you think about back to sort of 2007, getting to the end of that stage and heading into 2008, the financial markets started to show stress. Mm-hmm. And a lot of our competitors just hunkered down. They were just waiting it out. And look, we didn't have a business, so we were very aggressive, and we were out there trying to hire and acquire. Mm-hmm. Stone Point guys saw the merit in what we were doing. They thought we were going to make some nice value acquisitions, and we saw an amazing influx of talent and that liked what we were doing. And our model was one that was about specialization. It was about integration. It was not about being a roll-up. Mm-hmm. Dan has an athletic background. Dan was an amazing football player, all Pac-10 guy, played linebacker at Stanford.
Okay.
He and I both had, we'd been friends for a long time. My wife worked for him for 20 years. We we had similar designs on how to build teams, and that teams were the way to make this work, but also that we felt that in addition to equity alignment, that work-life balance mattered. And that ultimately for us, the promotion was that we originally thought about it as being culture first, but it was really people first. It wasn't investors first, wasn't clients first. It was people first. And we felt that if we built a great company that took care of our people, gave them opportunity, they felt valued, it was an empathetic culture, that they would stay with us and do great work. And if they stayed with us and did great work, we felt clients would join us and they would stay. And if clients join and you have a high retention of clients and revenue, shareholders are going to do great. And frankly, a lot of the shareholders were our people. So it was, might seem simple today, but back then it was pretty unique. And we really, we struck a chord with a lot of individuals who felt that they had just become a number, and they had just become an employee that comes and goes and punches the clock. And we needed everyone to contribute. Everyone was laying bricks. Everyone was making coffee, and including me. And I still go by that today, right? You gotta, my belief is, you gotta walk the talk. And if you walk the talk, people, you don't have to motivate people by words. You motivate people by actions. And so that's what we did. And this thing just started taking off.
And John, can you speak to the name a little bit? I know we talked about this yesterday, but the word epic, why that was, the inspiration for the name of the company.
Yeah. So, as you know, finding names is not that easy. And since we were building a team game with alignment and we wanted a lot of shareholders, it wasn't going to be the Dan and John company. So in May of, once we got the money, before we launched, our plan was to launch in July. Dan and his wife and my wife, Nancy, and I, we went to Hawaii for a week with the sole intention of drinking Mai Tais and coming up with a name. And we started banging names around and, being able to trademark names and get the insurance commissioner to approve it was challenging. I remember late one afternoon, I went for a workout, and it was just, we needed something big, and it needed to be important, more than big. I mean, the vision was big. It didn't mean it had to be a big company. It had to be important. And I came back and think about it, 08, 07, Epic wasn't really as wide-ranging a word as it is today. I came back and I said Epic. And other than Dan's wife, Nancy and Dan both said, that's awesome. And Dan's wife said, that sounds too bold. It sounds like you guys are bragging. You haven't done anything yet. I said, it's a goal. We got to get there. And
it's the vision.
And then frankly, it was a vision. And then, frankly, we tried to get the name, and we couldn't get the name. We couldn't get the mark on it. So we were literally getting ready to launch, and I was driving down to Dan's house. We were announcing the next day, and we finally were able to land on the name. We knew we were acquiring Calco, and their office was kind of off the Edgewood Road, off exit of Highway 280. Okay. And so I said, Edgewood Partners Insurance, and we needed a C, and we ended up with Center. So our actual name was Edgewood Partners Insurance Center, but the acronym was EPIC, and we became known as EPIC, and we launched as such. And the only way people ever see Edgewood is in official circles. They'll still see Edgewood Partners Insurance Center. So,
all right, that's super.
So the
cool.
name was the goal.
The name was the goal. The vision was there from the beginning.
Exactly.
That's very, very, very cool. So, as you were growing Epic, was there any major milestones that you came across or look back on as, these were instrumental to where we are now? Because I also want to give the audience the stats that I also provide in the intro. But as of now, Epic is has at least 700 million in revenue, more than 3,000 associates across the country, and is the 15th largest U.S. retail insurance broker, which some of that may have changed in the last few months. But what caused you to get to that point?
So the only correction, you got most of it right, is we're 900 million of revenue now, so closing in on $1 billion. And look, we never used financial targets as our goal. It was to do the right things. It was to build the right company. It was to be in the right spaces. So, yeah, I mean, early on, you're trying to, we had Calco, we had our platforms, we had some buzz going. The trades were very favorable to what we were doing. We had a lot of incoming interest, and probably the one moment that kind of changed the dynamics for us were we got together with a guy named Wally Brown, who is a kind of a legendary insurance guy in the Bay Area. He had built a nice business, sold it to Arthur J. Gallagher, had been a part of Gallagher for years. He and his partner, Brian Quinn, came to us and said, what do you think about doing something in the East Bay? And, at the time I was like, you guys work for Gallagher. Are you going to really move? You've been there a long time. And there were a lot of things that had happened that for them had changed sort of the dynamics of that company, and they loved what we were doing, and it took us a couple of months, but come early December, we hired Wally and Brian and 2 other producers and 3 or 4 of their service teams, and hired them on the first Friday of December. And Dan and I went out there that day to have a nice celebratory lunch with them as they were resigning to their staff. And in a matter of 2 hours, we had 20 people from that office in my waiting room waiting to be interviewed.
Oh my God.
By Sunday, we had 63 people come through our office to interview from that office.
Oh my God.
And we ended up hiring 54 people to change their mind. We landed with 52 people in 4 days.
Oh.
And I have to admit, it was somewhere between exhilarating and exciting to one of those WTF moments
scary.
Where you go, what the heck did we do? And, is the business going to come? Are clients going to join us? And we had 5,000 square feet. So we had to squeeze people into conference rooms, but it was amazing. We created war rooms. We all rolled up our sleeves. The whole company went out. We started pitching their old clients who were now prospects into what we were doing. And within about 2 weeks, we had, I think, $10 million of broker record letters. And the business just took off. We ended up in a lawsuit, of course, and I won't talk about how that went, but I learned a lot about litigation in California in that, and you know what? That became national news. I mean, I was getting calls from everybody. Could this possibly be true? Could you really have hired 52 people? It seemed like a plot and a plan, and it was anything but that. And so that just brought more incoming opportunities for us. People, the more they heard about it, the more they learned about our story and where we were going. It just became a driver of new opportunities and new acquisitions. We had actually owners started calling us to learn more, to have us be a featured place for them to possibly sell their company.
That's wild. So it sounds like that hiring was monumental, and it also kind of worked as a marketing engine to get the word out, right?
It did. Well, because we got a lot of press. I mean, some of it, it was the serendipity of it was it was done on December 7th, so it looked like it was sort of a plotted Pearl Harbor Day event, but it really wasn't. So there was a lot of urban legend to the story, but it set course. It really created a lot of momentum for us.
Very cool. Well, John, before we dive into Epic today and, your vision for the future and Galway Holdings, I just want to ask you a quick question on what you think has driven your success. If you had to point to 3 personality traits in yourself or 3 strategies that helped you achieve success in your career, what would they be?
So for me, as far as characteristics and traits, I think I'm a good listener, and people want to be heard. From the line from Hamilton, talk less, smile more. And so I think that people appreciate that. As I said earlier, I walk the talk. I don't tell people to do things I don't do myself. And, I get my hands dirty. I love being in this business, and I'm a good delegator. So if I find out and can trust who I'm in business with, I'm great delegating for them, because, what I learned early on was try and learn and understand what your skills and gifts are, and do a lot of that, and understand what your weaknesses and challenges are, and do less of that, but partner and hire people to do those things. And to be frank, I didn't know that innately. I learned that in kind of 97, 98, and I was having a lot of anxiety over what was going on in the business at that point in time, and I was trying to be great at everything. And I had an amazing executive coach who quickly showed me that is not the path. That's the path to a heart attack, and that's the path to not actually enjoying what you're doing. And I embraced it, and it's one that I do today. It's why this team game works. This company's not about me. It's about us. It's about we. And I'm in business with some amazing people, and I'm very fortunate they've entrusted me with either the businesses that they built and we acquired, and I get to be a steward of that, of which I take that seriously, as well as the people. And the people who joined us, whether they're, great producers or people I knew. I'm lucky to have so many people in the company today that I created great relationships over the course of my entire career, that there are some days I feel like I'm in a legalized frat house, and one that's doing good things, one that's not doing bad things, but it's, culture matters, and my goal is to be genuine and authentic. People use that a lot, but I think anyone who's worked with me over the course of time would say that I'm direct. I don't mince words. I try and be clear, and I'm good with disagreeing and arguing, and I'm glad with and I'm good with people having a different point of view. And if they own it, their point of view is going to drive the day, but I will hold them accountable.
Awesome. Yeah, I think that's all. Those are all things I think that I personally could get better at, and I think that it's not shocking that those have been instrumental in your success. When we talk about Epic today, is there a way that you would describe Epic's current culture, or the culture that you're striving to bring to the business?
Yeah, so, I think many things from the beginning still exist, and we remain entrepreneurial. We're very strategic. We are highly specialized. My partners who are helping me drive the business today, Steve Denton and Pete Garvey and John Jennings, and all of our teams below that, they are all great at something or some things, and they all contribute to the overall of who we are. And they've relieved me from things that operationally I either tired of or ran its course, and they're probably better than me. And now I get to spend my time on, a lot of things that are happening in the industry. That's where's the future going? Distribution's changing, underwriting is changing. Mm-hmm. Value brought by brokers to clients is changing, and I get to think about that, and I get to wake up at 3:00 still every day trying to figure out, and how do we differentiate and how do we win uniquely? So we're still entrepreneurial. It's a lot of what our recent move and the evolution of Galway Holdings. I mean, we could have just kept doing what we were doing at Epic. We have a great run, but we're looking at this company as being a long-term company. If you read any of Simon Sinek's books, his most recent book, The Infinite Game, is just probably the most impactful book I've read in 5 years. And you've got to make decisions today that build that for the next 10 to 20 years. And there are some things that will change, and lots of things that need to stick. I mean, they need to be, your people need to bank on them. And we're learning on that during COVID, right? Is how the foundation you built prior to COVID either enabled you to react and behave without interruption by running a company by Zoom, which I had no idea we'd be able to do, and have 3,200 people connected without being in an office. If you would have asked me in January, could we do it? I would have just said, I have no idea. And it has been seamless. And, yet we're missing pieces, right? It's still about, there's a great way to meet you, but, I'd rather be in your studio doing this together and absolutely, figuring out where we're going to have lunch after, and me get to know you a little bit so I can, pick your brain on when you're going to, how long you're going to take to build your company so I can buy it.
I totally.
Here's my pitch.
I hear you. I hear you. We'll have to talk later. I totally agree with you, though. I wish we could have done this in person. And I am really glad that you brought up the Simon Sinek book, The Infinite Game, because that was going to be one of my questions. What book would you recommend? So I'll make sure to take a note on that one and include that in the notes for this specific podcast. But while we are
read that, and read Principles by Ray Dalio, and read The Victory Machine. It's about our warriors.
Victory Machine. And who wrote Victory Machine?
Victory Machine was written by Ethan Strauss.
Okay.
He's kind of a controversial local writer, but gives some pretty good insight as to again how organizations get built. And I think you've rooted for the Warriors as long, if not longer, than me, so you know how bad it was for so many years. But what it took to turn it around, and it took some of the things I'm talking about to do that, which is right ownership at the top, right leadership at the executive level, right coaches, right general manager, and then players who want to play for the gold ring. It's about winning, right? So it's a great book in that regard.
That's awesome. Yeah, I made notes of those. I'm a big fan of Principles by Ray Dalio. That was just the way that he's run his business is so interesting with the extreme transparency. So I will make sure to note those in the breakdown of the show online. And so just a couple more questions on Epic before we jump off here, because I want to be respectful of your time. If there was an Epic employee, a brand new employee starting at Epic tomorrow morning, what advice would you give them as they are stepping into this industry with your company specifically?
Be you. Don't be something other than that. Just be you. And whatever the things that wake you up every day and that make you jump in the shower versus lollygag in and out, be clear about that, communicate that, do as much of that as you can. Our people still make their imprint on our company every single day. I mean, I end up, acquisitions are a hard thing. I mean, you get to diligence certain aspects of it, and we've made some fantastic acquisitions over the last 7, 8, 10 years. But what I say to them is, you built something fantastic. You're contributing into something that's really great. How do we learn from each other and do more of that? And the people that came with that, once we learn who they are and what they are, how do you fit into where we're going and ask questions, learn about it, be eager, listen, as I said, and raise your hand. And we want to have a lot of upward mobility here. I mean, we've got a lot going on in the way of how we want to change the trajectory around diversity and inclusion. I see a lot of companies that are checking boxes. We have no interest in checking boxes. I have interest in making a difference and changing how this plays out. And for us to provide opportunities that are good for our company and good for our people and good for our clients and good for them as well. And, we want to be inclusive. So, we have a lot to do over the next couple of years. So, we have grown so much in the last 3 years. I mean, the company grew from 70 million in revenue in 2013. We recapitalized our company at 2014 with the Carlyle Group. It was their first foray into brokerage distribution.
Okay.
In 2017, we grew to 300 million. So we quadrupled the company. We're capitalized again with Oak Hill Capital. And today we sit at $920 million in revenue. And this company, if you look at it and the way we think about it, is like a jigsaw puzzle, where the pieces fit together. And we have now, by these acquisitions, things fit together. We are almost a complete picture where scale matters, the differentiation matters. How do we provide unique services to our clients? And how do we provide great opportunities for our people, producers, service teams to be successful with what they do and be best in class with their clients? And that's our path.
That is a great answer. And I think that really applies. A lot of what you said applies to my next question. I just want to make sure I'm specific about the question that I asked, because again, I know there's a lot of agency owners that are listening to this podcast. If they were considering joining Epic, why should they consider, beyond anything that you already said? I know you mentioned a lot, but that's my first question. The second one is, what is the ideal demographic of insurance agency that you are looking to acquire?
So, I mean, over time that has evolved and morphed because, 2014, we were California only. We were migrating outside. So geography mattered. We were looking for what we'll call regional platforms that we could build off of and replicate our model in certain areas that we thought had, great growth demographics. But we always have really sought out agencies or brokers who did something or some things unique and different and really well. And everyone's got general business, so that's all fine. And we're good at figuring out what to do with general business.
Okay.
But if you have something unique that you've done and you're ready to expand that, you want capital to put behind it. You want a risk-taking attitude that'll help take it to the next level. We'll look at data and analytics in a way, and technology, where we can invest in it, invest behind them. That is, number one, a great choice then, and we are then a good choice for them. If they're just looking for a price, because I think valuations are pretty similar. My peer group, I respect them all, but we price things all pretty similarly. If somebody just wants to be rolled up and do their own thing and don't care about strategic connection and where they go next, we'd be a bad choice. We want people to partner with us. How can we take what they've done and do it to a much greater degree and be phenomenal at it, be best in league at that?
Mm-hmm.
So that's number one. Culture. I really want people to get a feel for our culture, which can sometimes be challenging pre-sale.
Mm-hmm.
But speak to people that sold their companies to us. How did it work out? What went well? What didn't? I can only answer that through my lens and my eyes. I can't answer it from theirs. I'm buying the businesses, so I see what I see, but I think they can do that. And then the litmus test is, could you hang out for a weekend with the people?
Right.
You can hang out for a weekend. You can, then you've gotten past a big hurdle. If you can't get past the weekend, then, do you really want to be partners with somebody? And I know I do. The people in this company, I've many of them, they're my friends outside of, out of work. And, I love their families. I follow what their kids do. It gets harder as you get to 3,000 people. I can imagine. I don't know. At my age, I don't know people's names as well, but I try like hell to do it. But you got to wake up and want to be in a company with the same people, right? You just, you're doing this every day. You want to know you're in the foxhole with somebody that you're going to watch their back. They're going to watch yours.
Right. Yeah. That's really cool to hear. And I'm sure there's a lot of agency owners that are listening to this that, you've provided a lot of background on the way that you approach things. And I love that you're using this as an opportunity to give more insight into yourself, into the culture of Epic. So I know that we are running short on time. I have one final question for you. And I would just love to know if there's anything that you've incorporated into your daily routine that has, helps you optimize the way you perform in a business sense. And so I know you mentioned, you could be waking up at 3 a.m. in the morning. What does the average day look like for John Hahn?
Yeah, so I'm a morning person, and I'm at my sharpest after my first cup of bulletproof coffee, and
right.
I get the brain working. But my day gets started around 6.
Mm-hmm.
I've had to learn new habits and ways since the pandemic, and where to do that. So for me, it's sort of I have to move from a couple of different locations so it feels fresh, and each conversation seems fresh. I inspire myself with what I wear every day. So for this, I had a little Epic swag that I had on, and my USA hat comes from Jim Craig, USA Olympic hockey goalie. This is the 40-year anniversary of them beating the Russians, and I was feeling inspired on David beating Goliath, because I know at a stage we were David, and I still feel like that some days. So it was my inspiration for the day was to honor Jim and what his team did, and that's far greater achievement than anything I've done. But and then it's I work out at least 5 days a week, if not 6. It's I find energy dips if I don't.
Mm-hmm.
My wife is gluten-free, and I found out that even though I'm not gluten intolerant, I feel better and healthier staying away from it and not having any trips to New York. I'm not being tempted by New York Italian food that I miss dearly, and New York pizza, where I would come back with a belly bomb. And look, as I've told our people, I've engaged in because I didn't know if this pandemic was going to lead to the end of the world or not. So I've been on a wine inventory reduction strategy.
Okay.
And so we're going through some pretty good wine selections every night, just in case the world ends. I don't want to have missed out on very many things. So it's, I have a great family life. My wife and I have a phenomenal relationship. She's my best friend and partner, and my kids I have 3 great kids who thankfully are not home with me. I don't think I'd love them that much if they were home with me. They're out on their own doing good things, but we're lucky enough that we share, sports and business. We're all Warrior fanatics, so we
go Dubs.
And yeah, man. And they by childbirth they became Yankee and New York Giant fans. So you can
all right.
see my New York Giants.
I was going to ask.
Roy Neiman behind.
Uh-huh.
Yeah, well, that commemorates, that's up because that was after the first year of business at Tri-City. I made more money than I ever thought I was going to make that first year.
Mm-hmm.
And that was the first year the Giants went to the Super Bowl in LA against Denver.
Okay.
And I took my dad to that game because he was a huge influence in my life. And we never thought the Giants would get in the Super Bowl, so I flew him out. When I told him about it, he got really nervous. He asked me if I was doing something illegal to have the money to pay for this, and I assured him that wholesale brokerage was legal.
Uh-huh.
And this really set the table for how I think about achievements. Is I look in the front mirror, in the car, but I oftentimes have to look back to make sure I celebrate what we did that was good and and you do that with the people that you did it with. So this reminds me of that because sometimes I forget about that.
Yeah, I'm glad we could assist in that process, be a little more retrospective, and also, really look back and be thankful and because you've had one of the most exciting insurance careers. And like I said in the beginning, objectively, one of the most successful people in the insurance industry. So it's so cool for you to share your story and everything it took to get to where you're at now. And before we jump off, again, I know we've run long, but is there any final messages that you want to get out there to the audience that's listening?
Yeah, no, I think I hit most of it, but you just landed on one, which is, look, I think if anything happens that has happened over the last 5 months, it's that those who are fortunate should live a life of gratitude.
Mm-hmm.
And I'm really grateful. It hasn't been a perfect career. I've had more than my share of mistakes, as I told you when we first chatted, that I have clearly made more bonehead decisions and mistakes than probably my whole company put together. But I get up off the ground every time and I learn from it. And I've made some good decisions and I'm willing to take risks. I'm willing to fail. It's a great industry in that way. You should, it's what I love about what you're doing. You guys I've been following you online for 2 years. I don't follow that many companies and you guys have a lot of guts. I love what you're doing out there. And if there's anything I can do to help in that regard, other than paying you a lot of money and making you rich someday when I buy your firm, I'm a lucky guy.
Mm-hmm.
My dad was one of my great mentors because he was a pretty middle of the road guy. And he told me early on that, he had 4 kids by the time he was 27 and worked 2 jobs and couldn't take risks. And he said, you're different than me. You need to do this. You need to be an entrepreneur. You need to be an example and you need to be somebody that over time will hopefully do something good. And he said, remember, sometimes it's better to be lucky than good. And he was right about that.
Well, that's awesome, John. I can't thank you enough for coming on and sharing the insight. I also know that we have so much more that we could talk about when it comes to, your interest and the amount that you've given back in the nonprofit sense and your passions there. And I think that, we'll definitely have to have an additional conversation down the line here to delve into more of those topics. So really appreciate you coming on. And with that said, we will sign off. Mr. John Hahn, thank you so much for coming on. I will talk to you soon, man.
Thanks, Pat. Good job, and keep this going. It's really fresh. I think what you're doing is really cool.
That's the plan. Will do. All right, John. We'll talk to you.
Bye. See you, man. Ciao. See ya.